friends, welcome to my YouTube channel. So today we are solving one problem on profit prior to incorporation. So here you can see the problem on board. The question is all about like this. There are two companies here, one is Base Company Limited and one more is BK Brothers. Base Company Limited was incorporated on 1/8/2015, it means on 1st August 2015 to take over the business of Messrs. BK Brothers, a partnership firm as a going concern on 1st April 2015. When you see that the business is purchased, or when they started here on 1st April 2015, it is understood that they have ended their year. It means that academic year ends on 31st March 2016. So here friends, we need to concentrate only on three dates. One is purchasing date, it means acquisition date. Second one, incorporation date, and the third one is closing date. When the purchasing date is 1st April 2015, then obviously the year ending date will be 31st March 2016. So here you can see that 31st March 2016 in the question, but there is one more date in the question which is confusing you people. What is that date? The company received its certificate of incorporation on 1/10/2015. We need not to bother about the receiving of certificate of incorporation. We need to worry only about on what date the company is incorporated. For us, it is immaterial on what date they receive incorporation certificate. So we need to concentrate only on three dates to calculate a time ratio. So I'll write it down the dates. The first date we need to consider to calculate a time ratio is opening date, or we call it as purchasing date. I mean the date when the company is been acquired, that is 1st April 2015. And when did they incorporated their business? 1st August 2015. Remember, when the year starts on 1st April, it has to end on 31st March of the next year. 31st March 2016. In between this, there is one more date given. As I already told, no need to bother, no need to consider. Considering these three dates, we need to calculate a time ratio. So how to write these dates? We need to write these dates in a chronological order. There are 2 years here, one is 15 and one is 16. I have written year 15 first and year 16 last. And even in the year 15, we have two dates, one is 1st April and one is 1st August. First, we need to concentrate and we need to write 1st April, then 1st August. 1st April is purchasing date. 1st August is incorporation date. From purchase date to incorporation date, we call it as prior period. Prior period means a period before incorporation. So how many months from 1st April to 1st August? April to May, May to June, June to July, July to August. There are 4 months here. How many months? 4 months of prior period. When the year is a period of 12 months, when we take prior period as 4 months, 12 minus 4, then after period will be obviously 8 months. There is no need to calculate again from 1st August to 31st March. It is quite simple. Out of 12, if you remove prior period, then remaining period will be after period. So therefore, 4:8 will be our time ratio. In simplification, we can still simplify it as 1:2 will be our time ratio, and always time ratio is used to divide fixed expenses like rent, rates, salaries, etc. etc. Hope you understood how to calculate time ratio. Next we'll move on to sales ratio. To calculate a sales ratio, we need sales from 1st April to 1st August, then 1st August to 31st March. Let us see what information is given with respect to sales in the question. The average monthly sales for the first 4 months were rupees 2 lakh, and the average monthly sales for the next 8 months were rupees 1,50,000. Here they did not give the total sales, they have given monthly sales. Before incorporation, the monthly sales was 2 lakh, and after incorporation, the monthly sales is 1,50,000. Then we need to convert that monthly sales into year sales in terms of prior period as well as in terms of after period. Then we should calculate a sales ratio. First we will calculate prior period total sales. sales before incorporation. They have not given here total sales for the incorporation period. They have given before incorporation how much sales business earned per month, and it is 2 lakh rupee per month, right? Into how many prior months we have? 4. Then this will be 8 lakh. Before incorporation, company earned a sales of 8 lakh, and sales after incorporation, how much? It is 1,50,000 as they mentioned per month. How many prior after months we have? 8 months. 1,50,000 into 8. How much it will come? 12 lakh. So therefore, prior period sales is 8 lakh and after period sales is 12 lakh. With this, we'll calculate sales ratio. We'll remove common zeros among both the values. Here 5 zeros common, here 5 zeros common. 8:12, both the numbers will divide in 4 table. 4 2s are 8, 4 3s are 12, and your sales ratio is 2:3. We use sales ratio to divide variable expenses or fluctuating expenses which fluctuate with the sales. So here are the two calculations. One is time ratio and another one is sales ratio. I repeat again, time ratio we calculated by using opening date, incorporation and closing date. As I have given, opening date is 1st April 15, incorporation date is 1st August 15 and closing date will be 31st March 2016. That is also given in the question. From opening date to incorporation date, we call it as prior period and it is 4 months, and from incorporation period to closing period it is 8 months. So 4:8 is a time ratio, or 1:2 will be our time ratio. Next, sales. Here the sales is given per month. Before incorporation per month sales was 2 lakh and after incorporation per month sales is 1,50,000. When they have given per month sales, first you need to convert the total period sales, then you calculate a ratio. If you calculate a ratio directly by taking those values, it will be wrong. First, monthly sales should be converted into total period sales. It means total period of prior and total period of after. So 2 lakh into 4. Why I have taken 4? Because we have 4 months of prior period. 2 lakh into 4 will be 8 lakh, and after incorporation monthly sales is 1,50,000 into 8 months will be 12 lakh. 8 lakh is to 12 lakh will be 2:3 is your sales ratio. So let us move on in preparation of statement of profit and loss account. So we will recall again what we did. So we are done with the time ratio calculation. We are done with the sales ratio calculation. Then let us move on in preparation of statement of profit and loss account. So in the description box, question will be attached. The entire solution will be there. If you are solving a question with me, along with me, you can just refer that question by taking a screenshot, because I am using question from my mobile for my reference. So let us move on preparation of a table. For to make the things easier, I have just written down the particular things already. So we will do the calculation. Okay. So statement of profit and loss account as on 31st March 2016. Particulars, basis, prior and after. This is our common columns we need to consider. Particulars column should copy as it is, how it is given in the question. Okay, that will make your work easy. First one is continuing operations. In that continuing operations we have revenue from operations, and revenue from operations is nothing but sales. The given sales is 20 lakh. We calculated in the previous slide, right? Prior period sales is 8 lakh and the after period sales is 12 lakh. What is in total? 8 lakh plus 12 lakh is 20 lakh. It means we need to divide that in that ratio. 8 lakh and 12 lakh, and this is actuals. We did not use anything to divide sales. They have given some information. Using that information we divided entire 20 lakh into 8 lakh and 12 lakh. Prior period is 8 lakh and after period is 20 lakh. And other incomes, no other income is given. Then total income is, total revenue for the prior period is 8 lakh and the after period is, after period is 12 lakh. So let us move on to expenses one by one. Cost of sales. Cost of sales should always divide using sales ratio. And what is our sales ratio? Just now we calculated, which is 2:3. 2:3. And what is the amount of cost of sales? 15 lakh. We divide 15 lakh using 2:3 ratio. We use the calculator here. 15 lakhs into 2 divided by 5, that is 6 lakh. And no need to calculate after period cost of sales. Total minus prior period you do, you'll get after period. Total is 15 lakh. So prior period is 6 lakh and the after incorporation cost of sales is 9 lakh. Altogether we should get 15 lakh. Okay. And next one is employee benefit expenses. In that employee benefit expenses, what is the first amount? Salaries. Salaries, is it a fixed expense or fluctuating expense, students? It is fixed expenses. Salaries. Fixed expenses means we should use time ratio. What is the amount? 60,000. And what is our time ratio? Time ratio is 1:2. We should use 1:2 ratio and then do calculation. 60,000 into 1 divided by 3 is equal to 20,000 for salary of the prior period. Total is 60. 60 minus 20 will be 40,000. Either you can deduct it or you can calculate it again. 60,000 into 2 divided by 3, it will be 40,000 only. Then, what is the next one? Director fees. Director fees means, should we divide it using sales ratio or time ratio? No, we will not divide the director fees because directors will come only after incorporation. So it will come only for after incorporation period. So in the basis column you can write it as after only. Then what to write in the prior column? No need to write anything, just put it dash. The total amount will come for after incorporation only. How much it is? 20,000. In the same way, managing director remuneration, same, directors and managing directors will come after incorporation only. So that is why no need to divide even managing director remuneration. Take it for after incorporation only. It is 4,000. I have taken 4,000 in the after column. Hope it is clear. We divided cost of sales using sales ratio. Salary is a fixed expense. We divided using time ratio. Director fees, because directors will come after incorporation, so we have directly taken for after column. Then managing directors, in the same way we have taken it for after column. Moving further, what is the next one? Depreciation. Depreciation is again a fixed expense. Fixed expense means which ratio should comes in your mind? Time ratio. What is the amount of depreciation? It is 6,000. We'll divide 6,000 using 1:2. Your time ratio is how much? 1:2. 6,000 into 1 divided by 3. It is 2,000. 6,000 minus 2,000 will be 4,000. Which ratio it is? Time ratio. What is your time ratio? 1:2. After depreciation, we'll move on to the next item, that is other expenses. Let us see what is there in the other expenses. Yes, in the other expenses, rent and taxes. Normally rent and taxes we will divide using time ratio, but before dividing time ratio, we need to check is there any information with respect to rent and taxes in the adjustment. Let us see. Rent was paid at the rate of 1,500 per month up to 1/8/2015. Up to 1/8 means 1st April to 1st August. That was our prior to incorporation period. It means the rent for the prior incorporation period is 1,500 per month, and thereafter it was increased to 2,000 per month for the remaining 8 months. It means we need to do the rent calculation remaining will become taxes. Will do as a working note. Yes, calculation of rent and taxes, I have written it already. Rent for prior period. How many months we have as a prior period? 4 months. And what is per month rent in the prior period? It is 1500. Then the total rent for the prior period is 6000. 4 into 1500. And what about rent for the after period? After period is 8 months and the rent after period is 2000 as per the given information in the adjustment. Then this will be 16,000. Then 6,000 plus 16,000, altogether the total rent is 22,000. Just now we saw the rent and taxes total value was how much? 24,000. Out of 24,000, the rent is 22,000. What about the difference? Difference is 2,000. That difference is called taxes. Taxes is total rent and rates. Total rent and taxes given in the question is 24,000. Out of total, the rent amount is 22,000 and the difference of 2,000 is taxes. We need to divide using time ratio, that is 1:2. Sometimes they'll give rent and rates and sometimes they'll give rent and taxes. Tax also we divide using time ratio, rates also we divide using time ratio. So here there are two calculation. Rent as it is you can put it for prior period 6,000 and for after period 16,000, and then taxes in total 2,000 that we should divide using time ratio. So we'll go back to the chart. Yes, rent as per the given information we are dividing, that's why I have written it as actuals. Actual rent as per the information we calculated in the working note is 6,000 and after period it is 16,000. And what about taxes? Remaining amount, that is 2,000, that should divide using time ratio, that is 1:2. We can use a calculator to divide the 2,000 using time ratio. 6 it will come. So we can round it as 667. You can calculate using your normal calculator. Okay. So here with some adjustment it is coming like this. Out of 2,000, if you remove 667, it will be 1,333 for after column. Okay, 667, 1,333, which is your taxes calculation using time ratio. Next we'll move on to advertisement. Advertisement is not a fixed expenses, it is directly connected to sales. We should divide using sales ratio, that is 2:3. What is the advertisement amount? We'll refer the question again. Yes, advertisement amount is 30,000. 30,000 into 2 divided by 5, which will be 12,000. Advertisement for the prior period is 12,000. 30 minus 12 will be 18,000 for the after period. What is the next one? Sales commission. Again, sales commission is not a fixed expenses. More you give commission, your sales will increase more. It means direct connection. Sales commission we should divide using 2:3 ratio only. What is the amount of sales commission? That is also 30,000. It means that also we should divide using 2:3. It means amount also same. Even advertisement we had 30,000 and we used 2:3 ratio. We got 12 and 18. So this is also same 2:3, 12,000, 18,000. What is the next one? Bad debt. Just check, is there any information given related to bad debt? No. Then we should divide bad debt using sales ratio. What is the amount of bad debt? 20,000. 20,000 into 2 divided by 5. That is, this is also sales ratio, because bad debt will happen because of sales. When you sell your goods on credit basis, there is a chances of recovery, that's why the bad debt comes. So there is a direct connection between bad debt and sales. So we should divide using sales ratio, that is 2:3. When you divide using 2:3 of 20,000 of bad debt, which comes to 8,000 for prior period, 20 minus 8, which will become 12,000 for the after incorporation period. And what about the last item? Preliminary expenses, nothing but formation expenses. Formation expenses we will not divide because these are the expenses incurred to start up a company. So there is no connection for preliminary expenses and prior period. So we will recover it once we incorporate. That is why we should directly take it in after column. There is no need to divide. So in the base column we should write it as after. Now it's time to make a total of expenses because we already done the totaling of incomes. We'll make a total of expenses. Expenses means it will start from cost of sales 6,60,667. From this 6,60,667, this should be compared with the total revenue, and the total revenue is 8 lakh, right? Revenue for the prior period is 8 lakh minus total expenses for the prior period is 6,60,667. Then the answer is 1,39,333. The profit for the prior period is 1,39,333. We call this profit as capital profit. If it is a loss, we call it as capital loss. What is this? Capital profit. Before incorporation, whatever profit we get, that is called capital profit. Then what about after column? First we'll make a total of expenses. Plus 4 8,000 plus 16,000 plus 1,033 plus 80,000 plus 18,000 plus 12,000 of added and 20,000 of operational expense, which is 10,53,333. This odd amount will come because we have divided 2,000 tax using 1:2 ratio. Let it come. Ultimately, what we need to concentrate, when we add before incorporation and after incorporation profit, our total profit should match with the profit given in the question. Only that should be our motto. So what is the revenue of after incorporation? 12 lakhs minus 10,53,333 is equal to 1,46,667. After incorporation, after incorporation profit is called revenue profit, or you can call it as net profit. When you add prior incorporation and after incorporation profit, that should be equal to the profit given in the question. So after incorporation profit is how much, student? 1,46,667, and before incorporation is 1,39,333, which is equal to 2,86,000. Can we check it out? What was the profit given in the question? Yes, it is 286. If it matches, then your problem is right. So this is all about your problem which will come for 10 marks in your examination.